Hey everyone, welcome to Elliott Wave Analysis tutorial video on Orca the killer whale. I'm going to make a separate playlist for this Elliott Wave analysis. And what are the patterns we see in the chart based on Elliott Wave structures? This is going to be the beginner's video, and as we evolve into this chart reading, and if the community members are also so sure about the Elliott wave structures, we can take it to the next level. And remember, I'm going to talk only about the structures in this video because it's a beginner's video. I'm not going to get into so detail because that video will be for another time, and probably an advanced level video, and I'm going to make it maybe next time. And there will be more educational content which I'm going to talk about, and that will be in future videos. I'm going to talk about how to use fib levels on Elliott wave structures, how to use GAN method, what are the 50% retracements on the price, and the Wyckoff trading method, and how we can combine all of these trading methods to our advantage. So let's get into the video, guys. Now, in Elliott wave structures, first I'm going to talk about the bullish structures here. And that would be 5 wave structures like this. And there are rules for these waves as well. The simple rules are: the third wave cannot be the smallest one. It means you can have 1 or 5 more bigger than the third wave, but the third wave should be at least bigger than one of the wave. It means, let's say this fifth wave here is larger, but third wave is still larger than the first wave. So this is still valid. Or we can say fifth wave is shorter and the first wave is probably larger. This is also possible because the third wave is not the smallest wave. So you got the idea. This is the simple rule. And the other rule which I want to talk about is the fourth wave here. This fourth wave cannot get into this first wave territory. It must be a retrace. It can be a significant retrace, but it should not overlap into this first wave. So this is another Elliott wave rule in the bullish structure. Usually this bullish 5 wave move is found when the trend is reversing. So you can find this in the bottom, and probably after that you could find an A, B, C correction to the downside. We will talk about the corrective structures later. For now, I'm going to only talk about the bullish structures. So in the bullish structures, we have a leading diagonal. How does the leading diagonal looks? So it looks like it also has 5 waves, but it goes up in a diagonal way, which means we have a trend line here. A diagonal doesn't need to be inside the parallel chain. Let's say this is a proper parallel chain, right? So it doesn't have to be inside this exact. It could be an enlarging structure. For example, let's say this is probably like a megaphone structure, and then we can still have this diagonal inside this megaphone structure, like 1, 2, 3, 4, and 5. This is also possible, and it could be also a structure which is slightly larger in the front, and it's probably squeezing towards the end. Could be possible also. So let's say 1, 2, 3, 4, 5. These are the possibilities in leading diagonal. And the rule here doesn't work as it was working here, like the fourth wave cannot overlap the first wave top. And in this, you can find multiple overlapping structures here. In the leading diagonal, this is normal. And another bullish structure is an ending diagonal. Ending diagonal and leading diagonal both are similar, same, I can say. This ending diagonal, it usually occurs in this fifth wave here, and it can be like this, like multiple overlapping structures. 5. So you can also ask me, why did I draw this ending diagonal on this fifth wave? Is this wave not supposed to be alone? No. This is going to be the slightly advanced tutorial, but I'm going to just explain that these waves here, it can also have subwave structures. We can have, in this first wave, let's enlarge a little bit here. In this first wave, we can have 1, 2, 3, 4, 5. And then we could have one ABC kind of a correction. So I will get back to this ABC now that we have already finished with the bullish structures. These are usually the bullish structures which happens in the price action. So when we talk about the corrective structures here, before we get into the corrective structures, I just remember, so I have to even mention that the wave 1, 3, and 5 are all 5 wave structures. In a bullish trending market, if you have an impulsive 5 wave move up, then number 1, 3, and 5, these are all bullish waves, and it always contain 5 wave structures. These are substructures I'm talking about. And 2 and 4, usually the corrective structures, and hence they always have 3 wave structures. Could be an ABC or could be a WXY. So let's get into the corrective structures here. And first we begin with an A, B, C. This is a normal corrective structure, which also contain sub waves like 5, 3, 5. And we can call this as a zigzag. And this zigzag usually has 5 wave in the A, like 1, 2, 3, 4, 5. And the B wave is almost the same as an ABC correction or a WXY, or it could be a triangle. So I'm going to talk about all these corrections, what we can get inside the main wave. And this would be 1, 2, 3, 4, 5. So this is called zigzag, and it's 5, 3, 5 structures. I will delete this to keep it slightly more clear because this is still a beginner's tutorial and I don't want to make it more complexity in understanding the simple wave structures. And next comes a WXY. If we talk about the WXY, usually if this zigzag gonna be 5, 3, 5 structure, then WXY has a combination of an ABC, 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 which is 3 times combination of ABC. So this is a WXY. And now we move on to triangle. Triangle is an A, B, C, D, E. This one here is a bearish triangle. Usually when the E wave finishes here, the price tends to move towards the downside, this way. And we also have a bullish triangle for the price continuation. And remember, this ABCD consists of 3 wave structures within them. So all these ABCD structures over here consist of 3 wave structures. That means we can have a multiple ABC kind of correction over here. And this price moves towards the upside. So I'm talking about this A here having 3 wave structure, 3 wave structures to the upside as a B, and you understand all these are 3 wave structures, and the price moves towards the upside. So let's name this and then let's name this one. These both are triangle. Usually the price, this is a bearish triangle and this is a bullish triangle, so I'm going to just name it as triangle. And now we can move on to corrections, that is flat corrections. There is a regular flat, there is a expanded flat, and also a running flat. And they look different to each other. And there are also bearish flats and bullish flats. And these structures always happen in a correction, and they are 3, 3, 5 structures. Let's talk about a regular flat. Let's say, okay, this is A, B, and a C. And then the price move towards the downside. I'm talking about if the price already has a downtrend here. Let's say the price is moving towards to the bottom, and then we get a ABC retrace as a regular flat, and the price moves down, continuation pattern. And we have another pattern called expanded flat, and that could be A finishes here, B takes out this bottom here, sweep of the liquidity, and C also sweep of this liquidity on top here. And then the price moves towards the downside. So these are all bearish flats, and the price, this is dotted trend line, is where the price comes to this range. And the third one is a running flat. Similar, A structure, B takes out the low, and then C doesn't take out this liquidity and stops here, probably here. And usually it's 0.786 or 1-to-1 kind of a measurement. What I'm talking about is, let's say, when I'm talking about 0.786 or 1-to-1 structure, I'm talking about the fibs. I'm just going to draw this one so that you can understand how this running flat could behave. So if you see here, the C wave came up to 0.786, 0.786. It can also come up to 1-to-1 here and then reject. So this is usually called a running flat. And the price, after hitting this range here, moves towards the downside. So this is the price direction, and we have a running flat here. So these are bearish flats. I'm going to name these as bearish flats. So I will delete these. And these flats, as I mentioned earlier, are all 3, 3, 5 structures, which means we will have an ABC here, another ABC to the downside, and then 1, 2, 3, 4, 5. That's called 3, 3, 5 structure. So now we get into the bullish flats, and they are typically an A, B slightly lower, and C takes out this low, and then the price move towards the upside here, and the price travels to this point because this is a bullish trend. So price has to travel from down to up and then correct over here and then move toward the upside. And now we draw an extended or expanded flat, that is, sweep the liquidity over here and then come sweep this liquidity again and then move towards the upside. This is an expanded flat. Price direction to this flat is also from the down towards the upside. And then we have to take the last flat, which is a running flat. And A, take out this liquidity over here, B, and do not sweep this liquidity, finish here as C. Similar to what happened here, if you can see, it did not sweep this liquidity and kept going down. So since this is a bullish structure, we still move from the down to the up, then get into this range, ABC, and then the price goes towards the upside. So these are bullish flats. Guys, if you want to take a screenshot, go ahead and keep these structures as a roadmap for your chart reading. You can use this on BTC or ETH or any other stock and try and find out what are the wave structures and how the price is developing. I'm going to end this session over here because this is just a beginner guide here. And if you want me to apply these on the price action live, then you can see my videos from I have almost like 45 videos already. I don't know how many videos, but you can check in each video. I have already used these structures and spotted BTC price action, and I'm successful in trading these structures and making money out of the market. I'm going to make the playlist of this Elliott wave analysis, and this is going to be the first video and the beginner video. And I'm also going to add some more information later on a little bit of more advanced chart reading. And also we're going to use these fib levels, how to spot the exact levels to spot an entry for a long or short. So if you like this content, guys, like and subscribe. And if you want me to make this kind of educational video, please comment down below and tell me what exactly you want me to explain. If you have any doubts, you're welcome to comment down below. I will see you in the next one.